Welcome to the Inner Circle Show. In today's episode, Tesla are doing well in China, Mercedes are on board, Palantir are getting even more praise, and Rivian and VW have signed a deal. But before we get into all of that, don't forget to like this video, subscribe to the channel, and turn your notifications on so you do not miss an upload Monday through Friday. A key metric that we can use to actually see how well Tesla are selling their vehicles in the Chinese market is by looking at the Tesla registrations. And last week, the Tesla registrations in China were very strong. Data is actually showing that China insured 17,000 Teslas last week. So this was between the dates of the 17th of June and the 23rd. Registrations is pretty simple. It's just referring to the number of new Tesla vehicles that have been registered for insurance in China. And this was the best week of 2024 so far, and this 17,500 included 6,000 Model 3 vehicles, which is the highest since the Model 3 Highland launch last November. So why do we care so much about the Tesla registrations in China? Well, we should care about Tesla registrations across the globe because it gives us insight into how well Tesla is performing in that given market. But China specifically is a very important market to Tesla, both in terms of China being Tesla's second largest market, but also China being the largest EV market in the world. But registrations in China have shown a lot of growth, but they've also shown a lot of fluctuation and a lot of volatility, especially over the recent few months. But this latest week of data represents a substantial 50% increase, 50% from the previous week, and that shows us that there is strong sales momentum building. Of course, short term, things go up and down, and one strong week doesn't mean that Tesla's doing really well in the Chinese market. And also, 1 week of low numbers doesn't mean that it's all over for Tesla in China either. So it's important to actually zoom out and see what's happening over time. The quarter is up by 13.1%, and hopefully this is indicating to us that Tesla can finish the quarter strongly. Year to date, Tesla China's registrations have been slightly behind the 2023 numbers. However, due to the recent surge in registrations, this could suggest that Tesla is actually closing this gap quite rapidly. But remember, every car that Tesla sell globally is another robot on wheels out there. It's another chance for FSD revenue in the future. It's another chance for a bigger robo-taxi fleet. Also, we have recently heard the news that Tesla have added Mercedes to their coming soon Supercharging network list. You can see that Ford and Rivian are already supported, but now there's Mercedes that have been added to the list of coming soon. Now, this does not mean that we've only just heard the announcement that Mercedes will be adopting the North American charging standard and getting access to the network. In fact, that announcement came back in July last year. But this is more of a recent development to that story. We know that we are also waiting for many other companies to actually be on that supported list to even get into that coming soon list. Because when we think about how this worked, Ford announced first that they were adopting the North American charging standard and that they were going to get access to Tesla's supercharging network, and they're supported. After that, I believe, came Rivian. They're supported, but we've got many others. We've got GM, we've got BMW, Nissan, and so on. But this does make us ask the question, why can't Tesla just give access to every single company at once? It will be in part due to the timing of each company's agreement with Tesla, but also there are other things to factor in here as well. For example, the technical integration. Each EV will use various charging standards and connectors. Tesla uses their proprietary North American charging standard, while many other automakers use the Combined Charging System, CCS. And to ensure compatibility, these other companies either need to adopt the North American charging standard into their vehicles, or Tesla need to be able to provide them with a connector that makes them compatible. But I suppose this can be done quite quickly. For example, Ford, they didn't mess around at all on this. They purchased adapters from Tesla and gave them to all their EV owners so that those customers actually had access to the charging network. And then in the meantime, the companies can update their vehicles, they can redesign their vehicles to actually accommodate the North American charging standard. But that obviously doesn't just happen overnight. Also, we have to think about capacity management. At first, the Tesla charging network was designed just to support their own fleet of vehicles. It wasn't designed really necessarily to support everyone else's vehicles from the off. Of course, I think Elon had it in his head that eventually it would get there. You know, he wants to be able to support other EVs on the road, not just his own. But at first especially, it was just designed to support their own vehicles, and they've had to expand the supercharging network over time. And if they were just to open up the network to all EV owners simultaneously, this could actually lead to overcrowding. And then as a knock-on effect of that, there could be reduced availability for actual Tesla owners. So that could cause a bit of an issue. So I think having a phased approach somewhat allows Tesla to actually monitor and manage the increased demand. Alongside this, you need to make upgrades to the infrastructure so that a larger number of EVs can be handled. And I'm sure as well, like I kind of said, the different agreements will have different financial implications, different arrangements, different timings in them, and all things like that need to be considered. We already know from Tesla's earnings that their services and other revenue section is growing over time. Now, we don't really know the exact percentage out of that amount that is due to the supercharging network, but it does seem like companies such as Ford, Mercedes will have to pay a fee to Tesla for their customers to actually be able to access the supercharging network. Whether this is a one-off fee, a reoccurring fee, or how much it is unknown yet. But also on top of that, the customers of these companies will need to pay Tesla to use the supercharging network. And I believe these amounts are more than what a Tesla owner would have to pay to charge. So this services and other revenue that Tesla has will grow over time. Do let me know what you think about all of this in the comments below. Palantir are starting to get more and more recognition as time goes on. Of course, they are still quite a small company at this point, but some of the big players, some of the big companies are starting to pay attention to them. We already know that they have some of the most respected, largest companies as customers, but also they're getting recognition from outside of their customers as well. And we heard recently that Bank of America are singing their praises. Let's take a look. I'm looking at this on Seeking Alpha, which by the way is a great platform. And if you want a 7-day free trial and money off, then I do have a link in the description below. But anyway, this is Palantir making Bank of America's 26 global best of breed stock list for Q3 2024. That was quite a mouthful, but let's actually take a read and see what's going on here. So, Bank of America security analysts listed the best of breed global stocks for the third quarter of the year. The best of breed is a stock that represents the best investment choice for a sector or industry because of its high quality compared to its peers. So let's just rewind. So it's a stock that represents the best investment choice for a particular sector or industry because of its high quality compared to peers, meaning that it's better than the competition in the sector. In addition, these stocks are highly liquid companies with solid earning growth, and future potential for margin expansion, all of which I would agree Palantir fit nicely in with. According to a global investment strategy report, Bank of America's global best of breed screen outperformed. Okay, so it's saying now that the list that the Bank of America are providing for their global best of breed is actually outperforming the All Country World Index, which is very, very interesting. So they do seem to be picking quite well. The group has also returned 470% since its inception on the 5th of April 2010, again outperforming this index. It'd be interesting to see how that compares to other indices. Of course, this is just one that they're given, but let's just carry on. These stocks have strong management, strong balance sheets, EPS growth, cash flow, and are the highest quality companies. I'm guessing there needs to be a comma there, but let's just think about this. Definitely agree with all of those for Palantir. They generate the best relative returns long term and protect against volatility short term. So let's see which 26 stocks are actually listed. Well, straight away we know that Palantir are in here, which is amazing. I think they are very, they deserve to be in this list. But also I want to point out some other really big names that Palantir has been put alongside with. Nvidia, AMD, Shopify. There are some other companies here that you may not agree should be on this list. Maybe Monster you don't agree with. Maybe Snapchat you don't agree with. Do let me know what you think about this list. But also these are some companies that I've personally not heard of, like this one, for example, or, some other companies, this one, because these are global companies. So that's another thing. Not only has Palantir been put in a list with some massive, massive names like Nvidia, to be the best of breed stocks in Q3 2024. But also this is for a global purpose. So this is saying to Bank of America's customers or readers that these are the best investments across the globe. And 26 stocks out of all stocks out there to get onto this list is quite substantial, I feel like. Of course, this is just one list by, a couple of analysts at one company. It's not going to increase Palantir's value by tenfold or anything like that. What Palantir is doing will do that, but it is great to see more and more recognition. Talking about recognition, I've also seen more and more analysts start covering Palantir. More and more analysts starting to speak publicly about their position and about their optimism in this company. So let's just take a look at what Stephen had to say here.
So yes, there is a rotation going on right now. I do think longer term.
That's actually just sparked a quick question I have for you guys. What rotation do you think we are seeing in the market at the moment? What's going to unfold? Do we think that utility companies are going to start doing particularly well and money is going to move into those companies? Or do you think that AI companies, tech companies will continue to do well in the mid and short term? I'm guessing he's going to go on to say that, but let's just have a look.
Term, like Kenny said, you do want to stick with the AI trade. Palantir is my favorite name in the universe right now.
Palantir is my favorite name in the universe right now. Out of all the AI, all the tech companies, that's a pretty big statement to make. But I think a lot of people are starting to really see that Palantir is actually providing value. Like I keep saying, I feel like a broken record at this point, but they're taking LLMs, they're taking their ontology, they're pairing it together, they're adding they're sprinkling some AI in there, and they're actually providing value. They are not just a nice to have.
So I am long AI going forward. That doesn't stop me from trading around my core positions. But I also...
What are the buys that you are dying to make? You just need to see them come down to a certain level, Sarge.
Outside of Palantir, gold, silver, uranium, electricity through the utilities.
Interesting. So gold, he's talking about commodities and also utilities, but he is still very much focusing on Palantir as well.
Like I said, the commodities-based trade is going to be the trade for the second half of the year.
Well, let me just drill down on Palantir, which, of course, has done a lot of government work, but now expanding exponentially into the consumer world. They've got all kinds of big data deals with the Cleveland Clinic and a bunch of different health clinics. And
this is the thing with Palantir. They are still relatively quite a small company if you take their market cap and you compare them to other AI companies, other tech companies. But the customers that they are attracting, the contracts that they are retaining, that they are expanding, that they are getting are really big deals. These are like the Cleveland Clinic, massive, massive organizations, the NHS here in the UK, many other companies like big companies. And that goes to show that these massive companies who could just pick from any, they've got enough money to pick from Palantir or any other competitor. Well, actually, they're picking Palantir, and we need to listen to that.
Clinics and businesses, right? I mean, but it's still pretty rich, 74 PE.
It's rich, which means something's off. Maybe they're pricing in future margin. That's what I'm hoping. The underneath, the operating cash flow, free cash flow, and the balance sheet are as strong as any firm I have ever seen for a company that size.
I agree. Incredibly strong fundamentals, and they only seem to be improving. But do let me know what you think about whether or not right now, at the current price, Palantir is maybe a little bit too expensive. I've said it before, but personally, I'm taking a dollar cost averaging approach to this. I'm going to continue to buy shares here and there as time goes on. I'm not holding back right now at current prices, but I will look to add more if it dips. Let me know your strategy in the comments below. In other market news, we have two very interesting, very exciting things to cover. Up first, we have an extremely bullish price target for the S&P 500 index. This is coming from Tom Lee from FundStrat. Now, typically, he does tend to be one of the more optimistic analysts, let's say. However, he has had quite a number of successes on his calls before. I'm speaking about ones involving the stock market, but also ones involving Bitcoin as well. Anyway, he is now saying that he sees the S&P 500 reaching 15,000 by the end of the decade, by 2030. The index right now is sitting at about 5,500. So if he's expecting it to get to 15,000 by the end of the decade, which is in like 5 years and 6 months time, he is expecting a 3x, which I think equates to about a 20% annual price growth. Last year, he predicted accurately, let me say, that the S&P 500 would end the year at 4,750, and it actually ended up finishing at 4,769.83. So he has seen successes. So even though this seems completely wild, could he actually be onto something here? With the S&P 500 up nearly 15% already in 2024, which, is probably down to the AI investment trend that we're seeing, he is now saying that the adoption rate for AI is staggering, but the use case is important because there's a labour shortage. I think it's very likely we're underestimating how much revenue all these companies will make. So that tells me that he is still bullish on AI. He doesn't think it's going anywhere anytime soon, and actually we still will see a lot of growth in these companies. And he mentioned a labour market shortage there. So I guess he's thinking that artificial intelligence could maybe actually fill this gap that they are seeing, that he's seeing, by automating tasks and increasing productivity, which would then lead to substantial revenue growth for these AI companies. But do let me know if you think this is possible or not in the comments below. And in other market news, we have just heard that VW and Rivian are going into business together. They are forming a partnership. Well, actually, in fact, VW are putting $1 billion into Rivian, with $4 more billion promised to come, with a total investment into the company of $5 billion. It looks like VW are getting quite a good deal here. They are buying Rivian shares pretty cheap. VW announced it intends to work with Rivian to create next generation software-defined vehicle architectures to be used in both companies' future EVs. After this was announced, we saw Rivian stock absolutely surge post-market. It was up by over 40%, but we'll have to see how this plays out in the next few days. Now, I think strategically speaking, this partnership could actually help both companies, because if we think about it, Rivian have been they have been spending a lot of cash each quarter for quite a while now, and in terms of cash, they are struggling. So actually having an injection of cash from VW could really help them out. And also VW can be helped by Rivian from the EV side of it, specifically software. And I personally hope this helps. Of course, I'm a Tesla investor, but I want to see as many EV companies do well to move the world towards sustainable energy. I have nothing against Rivian as a company, or against their products or anything. I think they make pretty decent EVs. I'm just not interested in Rivian as an investment personally. But let me know what you think. Do you think this is a good partnership for Rivian, for VW, or do you think this will actually just end poorly? Let me know in the comments below. On the screen now are the topics we will talk about exclusively on the Vault this week. And if you're a Vault member, I'm going to continue this episode and talk more about Tesla today. If you're not a Vault member, thank you so much for watching my show. I really, really appreciate it, and I'll see you in tomorrow's episode. If you want to watch these episodes ad-free, get exclusive and extended content and a bunch of other perks, become an insider of the Inner Circle Vault. Link in the description.